Let's have a look how to find companies like NVIDIA and how to know when to buy. Is it at the attractive price or is it overpriced? To avoid peaks like .com boom and maybe to get in after the .com boom bust. Avoid buying in at the 2007 market boom overpriced valuations and buy in when it was undervalued. Most important when we try to find companies to replicate NVIDIA is to have a look of the revenue graph in the first place of the trend what NVIDIA had. As you can see, it followed pretty much a logical smooth trend line, even though there were like few tips, but they were always preceded by a small dip, and the dip is still matching totally the trend line. So in order to evaluate the revenue trend, I came up with an indicator that pretty much ignores quarterly change and year over year, and all we want to see is did current revenues exceed the previous 1.5 year maximums. As if you even have a small dip in the revenues, and it might let's say some data providers might indicate that like there has been a huge lump in the revenue in the revenues, but you can still see that even though there was a dip, it still was higher than like let's say 18 months previous high. So like in case of NVIDIA, they can see there were big and long stretches of time frames that the revenue growth was very steady. So the second chart we see is an indicator I came up by myself again. Is I'm looking at how many so in change of the revenue, quarterly revenue change, how many times it was positive out of all quarters. So one is 100%, and we can see that like first few years NVIDIA never had a negative quarter, and then there were few, but the ratio never only stopped at 0.7, which is like very high of all like stock market companies. Like 0.7 is high, and the minimum we can see is closer to 0.6 before 2010, and actually then we can see that this vector, this metric, even since the stock market crash, it had a steady upward slope, And the same can be said to compounded annual growth rate of the revenues, because at the first NVIDIA had huge revenue growths which are unsustainable, but they were still until the 2009 crash, they were still higher than about 50. Now, later from this chart, it's quite difficult to look at the real numbers. I will give the exact numbers. So this is just to give the rough idea about the metrics. So these three charts represent book value and book value per share, and also one ratio. So most importantly about book value per share is we want to see it growing, simple as that. And even though there were few quarters with quite a significant revenue decrease, they were never really decreases in book value. So this is the same quarterly change percentage ratio. I showed about the revenues, and this until it bottom, we can see the upward slope again. And the third one is book to revenues ratio. We want to see how much equity we build if the revenues are increasing. Price to sales. This is the absolute value. We saw .com boom going to 30s later. After it crashed, we saw 10 times cheaper valuation, and this is this kind of valuations we want to replicate and find later in this video when we're gonna find the same kind of companies, and we will write down what were the real numbers, and we use a filter to find the exact matches. So price to book, kind of the same deal. We want to find these spots and with these numbers, and we try to avoid the overvaluation.com boom, and now the price valuations are ridiculous. And finally B, price tunings. So now we look at the real numbers, as it was very hard to read from the graph. So we just picked one of the cheapest valuations, which was after .com crash 2003 April. Compounded annual growth rate of revenues 50, ratio 82%, increased quarters, price to sales discount 39% of the from 100 of the mean, book value increase percentage ratio 88%, price to book 1 to 4, and we just see the company is public. So now we use the same numbers to filter, I'm gonna skip this and show it in the next few videos about the historical statistics. So as in, it's very hard to find as 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 close matching companies in media. I just took the liberty and came up with a little bit more conservative numbers. And here is the data frame, and here are the companies to have a look into. Best companies, current best companies. Best here. Yes, and I will put this in the description.